Monday morning, folks. Welcome to this technical outlook breakdown for US spot gold and silver. As we all know, gold broke through all-time highs last week, almost reaching 3,600 levels on US spot basis. Silver has also seen a very similar run-up. Let's quickly look into the charts, understand why this move in gold and silver took place, and what the technical outlook for gold and silver looks like next week. On Friday, the 5th of September, we saw gold run up by $40 in total. This move was primarily driven by this non-farm payrolls number. For those of you who don't know, non-farm payrolls is a measure of the number of private sector jobs created in the US in a particular month. As you can see, for in the last 4 months, the bars on the right-hand side have been extremely small, so much so that the reading for August came in at 22,000, indicating that 22,000 jobs were created in the US, as opposed to a 75,000 earlier estimate that was predicted. So there's a big difference between the predicted number and the actual number, and that basically said that the US is creating much fewer jobs than expected, maybe because of the high interest rates and for how long the interest rates have been so high. And this propelled gold to hit these levels that you see here around 35.86 as of Friday close. Now, looking at the daily chart of US spot gold, you will see that there has been a typical pattern that has been forming in gold. Gold has been seen to consolidate in these triangular patterns where the highs either remain stagnant or they drop down, but the lows tend to keep rising, as you can see here and right here. We saw something similar more recently where the highs remained stagnant. We kept hitting this 3450 mark on multiple occasions, and the lows progressively kept getting higher. So this is an example of a bullish wedge. And eventually, given we were leading up to the FOMC meeting, and given how the jobs data was shaping out, we saw this eventual break previous Friday, and we saw the markets capitalize on this break, rising up to 35.86 levels, right up till Friday's close. Now, looking ahead, firstly, the resistances for US spot gold lie first at 3,600 levels. This was the same high that gold hit last Friday. And following 3,600, we have the next resistance at 3,650. We can assume $50 resistances as we keep going because this is uncharted territory. Gold has never risen up to these levels before. So we are kind of estimating where the next resistances are going to be. On the downside, to foresee if there is any deeper correction that's going to be happening, we're going to be watching this 35-13 pivot. This is a point where gold may test and may bounce back and climb higher, or gold may test it and actually move lower. So we're going to understand what will be the nature of the pivot if gold corrects to this level. And deeper, we have two supports at 34.83 and 34.29. These are both below the 3,500 level, and these are also in $50 intervals just below the 3,500 level. So these are also supports that we're going to watch out. Given, as we see on the RSI, how overbought gold has been, and it has been so for the past few trading sessions, there's going to be some profit-taking pressure as we enter into the coming week. If you look at the economic calendar for this week, we have, very importantly, the retail sales, another indicator of US economic health. On Wednesday, very importantly, we have the Fed interest rate decision. This is where we're expecting the Federal Reserve to cut interest rates by 25 basis points, and also to provide us the economic projections for the future months. What is the rate cut cycle going to look like in the months to come? This is also something we expect in this meeting. And there are going to be questions that are asked to the Federal Reserve Chairman, Chair Powell, just in the aftermath of this meeting. So that is also something that markets are going to be glued to. What is the commentary like? How is the Fed positioning itself? All of these are going to be very key market points or very key takeaways that the markets are going to have. So based on this, I expect the metal to consolidate, given that we've already priced in a 25 basis point rate cut. But if there is a very strong signal of more rate cuts to come, there is every chance that we break past 3,600 as well and we climb higher. This is contingent on the commentary of Chair Powell in his FOMC conference on Wednesday night, Thursday morning, India time. On silver, when we look at the daily chart for US spot silver, we see a slightly different chart setup. You see silver has been continuously in this very parallel ascending channel. Has been fluctuating between these two parallel lines for quite some time now. In fact, going right up till April, ever since it hit those lows. But since then, it has been continuously rising steadily. We expect the next resistances in silver to be 41.74 and 43.10. And the first point where there might be a correction, a deeper correction, would be this 39.55 or actually the 40 level. So somewhere around this zone. So if silver on the US spot basis moves below 40, that would be an extent or a signal of a deeper correction. This does not change the fundamental long-term outlook. The outlook for gold and silver still remains bullish, but in short-term basis, these are the points that we'll be focusing more on. Thanks, folks. I hope that was insightful enough. Let's see how the markets play out this week. But till then, thank you so much and goodbye.